Hi, welcome to the Market Alert for Thursday, the 14th of December 2017. So yesterday, starting off in the pound, we can see that the market moving back to the upside, bit of a bounce going on here. Despite all the grief that May's getting, the pound is up on the overnight, which is strange really, because obviously rates going up in the US, generally that's good for the currency, so it's slightly odd that we're seeing this, but there you go, we've got the pound moving back up above the 20 bar average there, and what we need to do is to remove this. Let me just turn this other thing off here that keeps bleeping in the background. Yes, what we need to do is just to bring in a new 76 and 62% there, should the market turn around and continue to move higher there. This is the areas where you can expect to see some sort of resistance as the pound moves higher. News-wise today, what have we got? All medium impact until we get to 9:30. We've got retail sales, official bank rate at noon, forecast to remain the same. Not following the US on that one then. Super Mario's out at 1:30. Retail sales for the US at 1:30. Import prices. A lot of news today, but it doesn't seem to move the markets these days. But again, be warned when Super Mario is out speaking there at 1:30. The interest rate decision to keep rates unchanged should see the pound not really react to the news there. And what else have we got? The Dow. Yes, yesterday the market unusually moving higher from the off. You can see the buying there, a bit of profit taking once the market's got through the 24,550 level. And we've got the 26,000 level, 26,050, and then we get into the evening where we've got Yellen's announcement that interest rates were to go up again, so they're now sitting at 1.5, and the market really already factoring this in. You've got the double top resistance over here, market coming back, and then a bit of buying support coming in here where you can see the classic pogo stick supporting the market. And then prices trading sideways and back towards the highs once more. New all-time high for yesterday, and it looks like we're going to hit 25,000 before we even get to Christmas, so another 1,000 points put on. And then they have the audacity to say that Bitcoin is in a bubble, which is quite amazing really. So here you've got a new all-time high, 26,664. Won't be long before we're actually through this and into the realms of 25,000, which is going to be a monster. And if you look back to the beginning of the year, just drag over here. I'll have to go a long way back here. I'll tell you what, let me just make things a bit easier. Go to here and go to monthly, and there you can see how the markets moved during this time. We go to January. There we go. Just click on the low and drag up, and there you can see wow, staggering 15,000 to 9,000 points, 9,300 points the Dow has moved during the last year. And like I say, and then they say talk about the Bitcoin and the like being in a bubble, but all of these other bubbles are more serious than Bitcoin. Any collapse in Bitcoin wouldn't affect the economy, but a collapse in the Dow, the bond market, the housing market, and the debt markets would be catastrophic for the economy. So amazing how this one's just glossed over. And Yellen made a statement yesterday about this as well. Let me just find it for you. Yes, here's the article. It was in the press conference yesterday, the last live one for Yellen. Leisman asks Yellen, is the Fed worried by the market going up triple digits every day? And her reply is just nothing short of breathtaking, frankly. This is Yellen's reply. The stock market has gone up a great deal this year and asset valuations are elevated. We see ratios in the high end of historical ranges, but economists are not great at knowing what the right valuations are. We don't have a terrific track record. Really, I'll refrain from any extravagant language, but yeah, I mean, that's just staggering, isn't it? I mean, talk about confessions of ignorance. Low interest rates support higher valuations. Well, that's because you keep pumping money into the markets and sending the prices higher because it's so cheap to actually borrow the money. The risk in the global economy look more balanced than they have in recent years. No, they don't. Everything is overvalued. And then this is the piece de resistance, this one. There is nothing flashing red there, or possibly even orange on asset valuations. Well, that's just absolutely breathtaking arrogance, that is. I mean, it's unbelievable. And it says here, so this is not even flashing orange. You can see the S&P price to ratio. You've got the P and the VIX sitting there at 1994, surpassing 1994 highs. The everything bubble, crypto bubble, real estate bubble, stock market bubble, auto bubble, corporate credit bubble, stock indexing bubble. And yeah, and then Yellen turned to Bitcoin, and this is also talk about playing it down. Bitcoin at this time plays a very small role in the payments system. Yeah, at this time. It is not a stable store of value, and it doesn't constitute legal tender. It is a highly speculative asset. No, it's not. You're wrong there. The Fed doesn't really play any regulatory role with respect to Bitcoin other than ensuring banks are being prudent. So you mean piling in shortly so that they can take advantage of the rise in it. Yellen also said that creating a cryptocurrency is not something the Federal Reserve is seriously considering at this stage. I bet you they are. I bet there's something going on behind the scenes. There are limited benefits and a limited need for it. Simply because the central banks are terrified that the decentralized nature of Bitcoin is going to have an effect. But the best thing to do at this point is to actually play it down. And as she said, she summed up, there is less to lose sleep about now than in a long time. And these are the sort of words that we heard from Greenspan, Bernanke, and then we saw the implosion of the markets, of course, following this. And it doesn't really matter to her now. She leaves in February anyway, so she's managed to, up to this point, escape any sort of financial collapse and blame. But amazing, isn't it? The hypocrisy and double standards of these people is just, well, like I say, breathtaking, frankly. Right, let's have a quick look at the implied volatility. So yesterday, the implied volatility moving from 9.15 to 9.38. So interesting to see this because the underlying market actually moved higher as well. We did come off a bit before the close, so that could be the reason. But yeah, again, we've got a situation where the market's up and so is the implied volatility. And you see small nuances that give the clues. But I wouldn't think anything's going to happen until we hit that 25,000. It just keeps marching on. But nothing to see here. Move along. There's no problems, according to Yellen. And yeah, quick look at Bitcoin, see what this is doing. Let me just drag this one in. Where have we got Bitcoin daily? Sideways to lower as well. Something I wanted to mention yesterday about the cryptocurrencies. I don't know if anybody saw the big move in Litecoin this week. It doubled in value. I think it was Tuesday. When it actually happened. Yeah, it was Tuesday. And I'd read a lot about this over the last week. I'm a bit late to the party with regards to these, but I thought, well, I'll dip my toe in the water and have a look at it. And bought it just over £100 a coin. And it doubled in value, and that was from different reports that I'd read. And the reason, another fundamental reason in actually, besides the uses of the coin, was purely and simply because if you think about this logically, that's one of those moments of realization, I suppose, that if they've got a Bitcoin futures contract, then the focus is going to be on Bitcoin. And anybody that's got half a brain are going to say, well, look, let's forget Bitcoin now and let's move on to the undervalued ones like Ethereum or Litecoin. And that was another reason why I thought, well, it's worth a punt just to actually do, applying that logic, as it were, that, I don't know what it is with the arrogance of the banks and the central banks in particular, that people can't make their own mind up and have an alternative strategy, as if everybody's going to keep piling into Bitcoin. But there are other currencies that haven't got a futures contract and can't be rigged or attempt to rig them. We'll move into those. So you'll see these other alternative cryptocurrencies and coins move higher as a result of saying, okay, fine, if you want to play with Bitcoin, you can play with it, but we'll move into all of these other ones that frankly are undervalued. So yeah, interesting times, sort of cat and mouse with the central banks as far as the crypto traders are concerned. Near and long, may it continue as well. Right, that will do it for this one. And if there's anything to report, I'll let you know. Other than that, as ever, thanks for watching. See you in the next one.